The global debt at 313 trillion, not counting all the derivatives, and the global gold supply is almost 70, well, let's see, hundreds, thousands, millions, 7.498 billion ounces. That's it. And that means that the current fundamental value, which you've heard me say, and I know it sounds crazy, is over almost $42,000 an ounce. And the fundamental value of silver is $2,000. So severely undervalued because they're going to hide it until they can't in a whole bunch of currencies. So all you need to do to determine the true value of an ounce of gold for its most important function, which is to hold your purchasing power intact, is divide the debt by the gold. And that's how you get that 42.
In the United States, the Congressional Budget Office forecasts that the debt-to-GDP ratio will exceed 150% by 2034, up from 98% at present. Put another way, that will slingshot the nation's debt to the highest levels in U.S. history. Beyond 2025, analysts anticipate continued strength in gold demand. Some forecasts suggest that prices could approach $7,000 per ounce by 2030, driven by structural economic shifts and persistent inflation. Gold's historical role as a crisis asset ensures its ongoing relevance in investment portfolios, especially as global debt levels rise and financial repression becomes more common. Financial advisor Lynette Zang emphasizes that fiat money is created through unlimited debt issuance. Based on her analysis, Lynette Zang states gold's finite supply, estimating its true value at $42,000 per ounce based on the global debt of $313 trillion. Similarly, silver's value is over $2,000 per ounce using historical gold-to-silver ratios. The potential for rising U.S. government debt could prompt central banks worldwide to increase their gold holdings. Bank of America reports that physical gold now accounts for 10% of global central bank reserves, a striking leap from just 3% 10 years ago. Experts predict that gold's share will soon surpass the euro's, making it the second largest reserve asset after the dollar. Historically, Zang notes that gold and silver have been revalued over 4,800 times during monetary resets to restore confidence. She predicts this will happen again, with timing tied to debt levels at the reset. Looking at the technical patterns, Zang mentions silver's long-term chart shows a surge toward $2,000 per ounce once resistance breaks. She compares this to a compressed spring and urges investors to focus on long-term trends over short-term noise. Value Research's report highlights that silver can deliver strong short-term gains but has historically displayed much more volatility than gold. Over the past 5 years, silver's returns have swung from as low as -2% to as high as 21% annually, compared to gold's more stable range of 7% to 19%. Now we present the clips of Lynette Zang's insights from her recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Look at global debt because that's how money is created in this system. And this is fiat money versus sound money. They're both money. They're just the flip side of the coin. So with debt, which is how money's created currently, it's an unlimited amount, right? That's why every time there's a problem, central bankers go to their printing presses because they can. There are no limitations on that. Now, every time they do that, the purchasing power of the value of the currency goes down, but what do they care? They get to use it first when it has its most value. It's us, the public, that has to deal with everything else. But the global gold supply is finite. I don't care if they find a new discovery. Anytime anything is physical, there's going to be a limited amount of it. Anytime. So the fundamental value that I'm about to show you represents the true value of gold, the fundamental value of gold on a 1-to-1 cover ratio, which means that this is how much it's really worth. When they do that overnight reset, I can't tell you what the cover ratio is going to be at that time. And nor can I tell you what the fundamental value of the gold is going to be at that time because it depends on the level of debt that they've grown. But let's just stay with current so we're dealing with facts. And the global debt at 313 trillion, not counting all the derivatives or all the other wonky products and complex products that Wall Street creates from it. So that's 313 trillion. And the global gold supply is almost 70, well, let's see, hundreds, thousands, millions, 7.498 billion ounces. That's it. And that means that the current fundamental value, which you've heard me say, and I know it sounds crazy, is over almost $42,000 an ounce. And the fundamental value of silver is $2,000. This is how you know that it's so severely undervalued, because they're going to hide it until they can't. And we've seen this happen over and over, even currently in a whole bunch of currencies that are dealing with hyperinflation. So all you need to do to determine the true value of an ounce of gold for its most important function, which is to hold your purchasing power intact, is divide the debt by the gold. And that's how you get that 42 grand. And silver, remember, okay, is historically, when they did this is a 20th of an ounce. This is a full ounce of silver. So at a 21-to-1 ratio, that's how you get over $2,000 right now for the true value of silver. So can you see how severely undervalued it is? It will go to its fundamental value. I can't tell you exactly when, but I can tell you that it's happened over 4,800 times, 100% of the time. It's the way they attempt to get your confidence back. But this data then helps determine how much silver and how much gold do I really need to accomplish my goal. So on the barterable part, we're going to look at silver first, because this is such an interesting long-term chart. You always have to look long-term because you can see anything short-term. But long-term, what we've got are two huge cups, right? Silver currently has not concluded this cup. This is what I keep talking about, that, well, maybe it's not going to happen by the end of this year, but it's working on it and it's definitely happening. So it'll probably happen next year. But since this is a double cup, here's this one big cup, here's this next big cup. Once that breaks above that, can you see how silver is likely to go toward that $2,000? Because it works like a spring. I think I have a spring in here. I do. Works like a spring. And if you hold that spring down and you suppress it and you suppress it and you suppress it, when you remove your hand, it springs. In this case, if it breaks that top, it'll spring up. It's just what always happens. So this is a huge technical pattern, especially with two major cup formations. Are they showing you this? No, they're showing you short term. They don't want you to understand how to get into position to protect yourself. But this is why silver will absolutely go to its fundamental value once it crosses that line. And it's why you see in some currencies, or at first, that we could see that gold and silver ratio grow a bit more narrow. However, once we enter the hyperinflationary stage in earnest, we won't see that anymore.
While reflecting on the market, Lynette Zang discusses the historical trends in valuation of the gold coin index, which began in 1970. She highlights that despite recent gains, the index remains severely undervalued compared to its 1889 peak of $181,000. Lynette particularly mentions the value of owning gold, as according to her, there is no fever like gold fever. Gold coins have a fascinating history, and their value has endured through the ages. Currently, the gold supply is roughly 208,874 metric tons. Estimates differ slightly, but this approximation results from assessments from the U.S. Geological Survey and the World Gold Council, among other experts. Based on the average price of gold in 2023, that translates to $14.28 trillion. That might sound like a lot, especially in dollar terms, but the world's available gold supply could comfortably fit into 5 Olympic swimming pools. Moreover, Zang predicts a breakout to higher levels, emphasizing the potential for substantial price increases during a monetary reset or in the event of gold confiscation, making gold coins a valuable asset for wealth preservation. Let's get back to the interview.
So this is where this market started back in 1970, and the index an index is a whole bunch of coins, a whole bunch of these, right, put together. And that index started at 1,000. you can see that once gold was legalized to hold again, that we had a huge spike. We did that in spot market too, but more so in this market because this is a finite market, especially since in 1986, they standardized the grading of these coins. Up until that point, if I were a dealer, I could look at this kind of go, oh, I think this is a mid-state 65 and sell it to you that way. And maybe it was really a mid-state 61. So the whole industry was standardized and it really took off. And then, of course, you have this huge drop down. So what I'm showing you over here in 94, that's when you had the bottom of it, of that index at almost 47,000. This is the bottom dip right now. 2021 was the bottom that this index dipped to. It's higher than this one, though, as we can see. All have not hit the peak that we did in 2008, right? So those premiums are going to grow if history is any guide, which it typically is, but these are severely undervalued, and my personal expectation is that, number one, we have to go and hit this top line, and we're on our way there. We're close to a second breakout. And then, well, we don't have anything until this one here. So these coins are most likely technically to go a lot higher because, as you can see, for this entire year, they've just gone up and up and up. We need that second breakout. We will get it. When we get it, I will let you know. But essentially, right, which was 181,000 to that index. Will it go there? My guess is yes, but I can't guarantee that. However, we are starting from a severely undervalued level, and there's no fever like gold fever. And especially if they do indeed do a covert or an overt confiscation, and now this is the only way that you can hold gold, what do you think are going to happen in terms of prices? And when we do that reset, what do you think is going to happen in terms of prices? It's going through the roof. And that's why you can then take those gains and convert it into those underlying income-producing assets.
The figures noted by renowned expert Lynette Zang underscore how undervalued both metals are in today's market. As global debt continues to rise, both metals are poised to play a crucial role in preserving wealth during a monetary reset. Are you considering increasing your exposure to gold and silver to benefit from their projected revaluation to $42,000 and $2,000 per ounce, respectively, and secure your financial future? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.